Greetings everyone, welcome aboard. Happy Wednesday to you guys, May 25th, 2011. Here's your live trading recap. I'm Joseph James, sidewaysmarkets.com, schooltrade.com. Guys, another great week here comes to an end in the live trade room. Now, today's our last day of trading this week. We got the long holiday weekend in front of us. So, of course, happy Memorial Day to everybody out there. We'll be closed Thursday, Friday. Holiday is Monday. Closed Tuesday, and we'll be reopening next Wednesday, June 1st. So we'll see you guys back here June 1st. But before that, we had to finish up our week this week. Now, Wednesday mornings are pretty much always the same. What do we know about Wednesdays? 3 phases of crude oil. Now, we talked about those 3 phases this morning. We posted the information on the blog today. We did our morning prep at 7:45 this morning, and we discussed those 3 phases of crude oil. Well, of course, we know the first phase on crude is before the news. And before the news this morning, gold's flat, crude is sloppy and sluggish. So we decided we're going to wait, and we're going to wait until the second phase. The second phase is from 10 o'clock till 10:35. That's when we have a small window of opportunity, but we won't trade after 10:15. So phase 1, 8 o'clock till 10 o'clock, sloppy and slow. Gold, flat as a board. Crude, chopping around, where was it? Middle of that wedge, right? We'll grab a look at the second. Sideways range, towards the highs of the wedge, but in a wedge inside the wedge. We'll show you guys in a second. First phase, nothing happens. Second phase, 10 o'clock comes around. We're looking for trades now, but we're being cautious. 10:15 rolls around. Now I take my hands and I'm sitting on them. From 10:15 to 10:35, it's no trades for me. So I'm sitting on hands through the second phase of the morning. And at this point, we're thinking to ourselves, all right, let's be careful here. Okay, now think about this. We really didn't know what to expect after 10:30. Normally, we get that late morning move after 10:35. And we were hoping for that today. But there were a couple things in the back of our mind that were telling us, let's be careful. Let's not force that trade. And of course, it would be easy to because we hadn't taken any trades yet. This is when your emotions are really firing on all cylinders. Okay, at 10:35, your mind is going, take it, we need a trade. And if you're like how I used to be, and again, this is the exact wrong way, but how I used to be was, I used to think not trading was missing opportunity for profit. Boy, was I wrong, right? I forgot about missing opportunity for losses, right? So we didn't want to force the trade, even though I know, I myself included, at 10:35, right, I was itching that trigger finger, right? I'm itching to get in this market right now. And remember, your emotions are going to start playing in, so it's very important that we reminded ourselves. It's a short week. It's a holiday week. Okay, so we don't expect to have as many traders right now as we did last week this time. Okay, traders are human beings too. They're looking for any excuse to get out of town early, take advantage of this long weekend. And of course, GDP tomorrow. GDP tomorrow, right? Big news event tomorrow morning. We talk about this thing called the golden lunch. If you want to know what the golden lunch is, search the golden lunch on the blog. Now, what is the golden lunch? The golden lunch, that late morning move. But we have some things that we have to worry about. We don't get a golden lunch when we have news the next morning. What do we have tomorrow morning? GDP, jobless claims at 8:30. That tells me right away there's a high likelihood that traders are taking off early for the long weekend. There's a high likelihood that traders are going to be taking off early in anticipation of the news tomorrow. Think about it. If I'm Goldman Sachs, I can't trade right now until I see what the GDP is tomorrow. If I'm a Goldman Sachs, I'm a big money manager, I'm trading 1,000 lot. I can't get in and get out with my client's money in time for GDP tomorrow. So most major money managers are going to think to themselves, I can trade the inventory number, but I can't trade it very large size because I can't get in without getting out before tomorrow's news, which is GDP. So we knew we had a couple things here in the back of our mind that say, you know what, we probably will get the late morning move, but it might be pretty low volume and a little bit sloppy. And that's pretty much what we got. All right. At 10:35, news comes out. Now I'm in my third phase. The first phase, 8 to 10. Second phase, 10 to 10:35. 10:35 rolls around, and what do we get? Well, we got pretty much what we assumed would happen. Now, how do we know what was going to happen today? Crystal ball, right? ESPN or something like that, right? Did I pay an analyst team, right? Do I have $1 million budget to pay some analysts to tell me exactly what's going on? No. We looked at the news, but not the news today. We looked at the news yesterday, and not just yesterday. We looked at it last week. Remember what we saw last week? Philly Fed, Empire State Fed, and then what was it? Yesterday morning? Was it yesterday morning? We saw the Richmond Fed. Now, what are those again? Go to the blog under Trade Room Resources. Search for Philly Fed Index, and you'll learn about these manufacturing index news reports. So at 10:30 this morning, what do we see? Well, actually, back up real quick. Last week, what did we see? We saw manufacturing indexes dropping. Not just dropping, falling quickly. Empire State came in lower. We saw Philly Fed last week came in lower. And then this week, the Richmond Fed came in lower. 3 different cities, Richmond, Virginia, New York City, right? And of course, Empire State, right? New York, Richmond Fed, that's Virginia. And then Philly Fed, right? That's, of course, Philadelphia. So we had 3 major cities in the U.S. reporting manufacturing sectors are slowing down. Then, what happened at 8:30 this morning? Durable goods. What are durable goods? Durable goods orders are the actual products being shipped out of these factories, and they came out rock bottom low. And that pretty much, right, that was a nice, easy fastball right down the middle. And I looked at it and said, all right, well, manufacturing sector is clearly dropping. So clearly the economy is slowing down, right, when it comes to manufacturing products. Now, how does that relate to crude oil? It does, because every time a factory makes a product, what happens? It ships it out the door. Gets on a truck, goes in a plane, whatever, however it gets there, it consumes natural gas and crude oil. I make a new higher high through the no trade zone. Dollar's dropping. Buy a pullback. Now remember, when I take this trade though, I'm not going to take the trade inside the no trade zone. Okay, I'm going to take that trade just above the no trade zone. So you'll see here 1106. Again, we're getting a new higher high. I'm going to buy a pullback. Momentum confirmed, speed confirmed, and also we knew now the channel is in play. So now here we are buying that pullback, wave pattern 1. Now look where I did. 110. I got in above the no trade zone. 109. Now, I didn't plan it like that. I waited for a big buyer to come in, push new highs, and then I waited for a pullback. I really had no idea whether I get filled at 09s, 10s, 12s, 15s. Got filled at 10s. I got my 10, my 20, minus 2 is 18. So again, I traded above the no trade zone. I make $180 off it. New higher high. I'm buying pullbacks. Once again, a new higher high again. One more pullback. Now remember guys, whenever I make a new swing high, every one of these new swing highs here, I can be buying pullbacks. Once I get that swing high, 1109, 116, plus 5, plus 10, scratch, another 20 ticks. Right? So far here today, 3 out of the 5 trades have been plus 5, plus 10, and then bounce me out for a scratch. We get one more, new higher high. So at this point, the dollar is making new lows of day. I have a new low of day on the dollar right now. That new low of day on the dollar is telling me maybe this is the catalyst now that's going to get this morning going. Remember, I had just taken 1106, 1109, buying pullbacks, not going very far. And of course, I'm keeping in the back of my mind right now, maybe we're not going to get this late morning move. Maybe we're not going to get this move right now. Remember, we're worried about the GDP tomorrow. Short week, low volume. These are concerns we had. So I needed to have a good reason to take those next 2 trades, and I got that. The dollar, of course, right, begins to drop.